What are the fundamentals impacting corn, soybean, and wheat futures?
The fundamentals in each of the corn, bean, and wheat market are all different. For the corn market, we've seen lower demand on the ethanol side, potentially lower demand on the feed side with the shutdown of some livestock processing plants, and even maybe a little bit lower export numbers. Last week, we saw a rally in the market on talk that China might come in and buy some U.S. corn. Right now, if they do, that might be new crop. So the outlook for corn is lower prices as long as there's a good U.S. crop. For soybeans, the Chinese started buying U.S. beans last week, which offered support. Again, we don't know how much they're going to buy under the phase one, and since farmers are adding 9 to 10 million acres this year versus last year, soybean carryout could increase over the current USDA forecast, so about 300 million bushels. Some people are as high as 500. So that could send soybean prices lower, assuming normal weather. The wheat market's been a weather market. Last week, we rallied on talk about dryness in Europe and Russia, and even some dryness in the southern plains. But there are scattered showers this week and maybe next week across Europe and parts of the former Soviet Union. So wheat market has been trading lower and probably will continue to trade lower unless there's a change in the weather. Globally, there's probably going to be less feed wheat done in 2020 because of the lower corn prices, and so that also could weigh on wheat prices.
What is the current U.S. summer crop planting progress and 2-week forecast?
We think about maybe 22 to 24% of the corn has been planted to date, well ahead of last year. Parts of Nebraska, Iowa, and Illinois probably are done planting corn. Soybean planting is at 7 to 9% done, and we feel that if we look at the 2-week forecast of pretty much normal weather, that crops will get planted on a timely basis, and maybe the entire corn crop will be planted by May 10th. The 2-week forecast basically calls for normal rains and normal temps. At the end of the 2-week time frame, it might be a little cooler across the Great Lakes and maybe the upper Midwest. And there might be a little bit too much rain across the Ohio River Valley and maybe not enough rain in the southern plain. But overall, there's nothing really here for funds to cover their short positions or go long in the grains.
What is the USDA expected to say on their 2020-21 U.S. supply and demand report on May 12th?
On May 12th, the USDA will come out with their first estimates of 2021 U.S. corn, soybean, and wheat supply and demand. We think the corn number will show carryout close to 3.5 billion bushels due to a normal crop and drop in demand, especially in ethanol. For soybeans, right now people are using carryouts maybe around 3 to 400 million bushels, but since farmers are increasing acres and assuming that exports don't dramatically increase, the carryout could be closer to 500 million bushels eventually. And for wheat, they're looking at a 700 million bushel carryout. That's because of the lower crop. Again, we'll have to kind of watch and see how exports unfold and domestic food demand and the size of the crop. But of the three, the wheat carryout is probably the one that shows the most promise. The problem is globally, world wheat stocks are record high, and normal crops in the Black Sea and Europe will probably keep the carryout worldwide high and offer resistance to prices. So when we look at the demand destruction, when we look at the outlook for the U.S. 2020 crops, farmers should still be in a cash sell mode for corn, beans, and wheat. Prices in the fall could trade a lot lower than they are now, and we'll be watching headlines as far as updates on the spread of the virus, weather conditions, and any stimulus that the USDA may come out to help the economy.
What are the global economic implications of the copper market rallying 40 cents from the low that was made on March 19th?
This copper market has advanced 40 cents since the lows were made in the middle of March. This suggests that there may be some optimism as far as what traders are seeing in the economic outlook globally. Of course, not in the short term, but in the long term, since so many products are made with copper. So a rally in copper, I think, has some bullish connotations for the long-term outlook for the global economy.
Why is gold outperforming silver, and will this trend continue?
Well, the gold market has outperformed the silver market, and it looks like one of the main reasons is that in the very near term, traders believe that there could possibly be some inflation coming down the road, and that is a reason for gold to be a bit more attractive as an inflation hedge over the silver market. So even though I would expect both gold and silver to advance, I think the gold will continue to trade higher against the silver. Now, both of these markets are a little bit lower today, but longer term, the precious metals, I believe, will trend higher, and that advance is likely to be led by the gold market.
What is the likely outcome of the series of central bank meetings this week?
Well, we have several central banks meeting this week. In fact, just today we had the Bank of Japan in their announcement indicating that they will be purchasing unlimited amounts of government bonds. So this is very stimulative, although probably no surprise. Also this week we'll have the Fed with their meeting, a two-day meeting. First day of that meeting is tomorrow. Also, it appears that there is some possibility that the Fed could be a bit more accommodative in their tone, and that may be one of the reasons why the dollar index has come under a little pressure today. In fact, the dollar falling under an 8-day uptrend line with the pressure this morning. In addition to the Fed, there's the European Central Bank. They meet on Thursday. I think there's a similar scenario. Could be more hints of accommodation from the ECB. So basically all of the major central banks around the world, to one degree or another, are becoming more accommodative. And I think this is a trend that will last for quite some time, and it implies that interest rates will also stay relatively low for a very long period of time.
The views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.